China's economy may look strong from the outside, but at home, warning lights are flashing. As President Xi Jinping prepares for high stakes talks with US President Donald Trump next year, China is facing a slowing domestic economy that could shape every move at the negotiating table. Exports are booming. In fact, China's trade surplus has crossed $1 trillion, a record. Factories are shipping more goods than ever, keeping headline growth near official target. But beneath the surface, the picture is far less reassuring. Consumer spending is weak. Retail sales grew just over 1% in November, the slowest pace in nearly 2 years. Industrial output is losing steam. Investment is falling. And confidence remains fragile. At the heart of the problem is China's property crisis. With millions of households tied to real estate, the housing slump has dented wealth, spending, and trust in the economy. Even President Xi has publicly criticized reckless investments, calling for more sustainable growth. Beijing wants to shift from an export-driven model to one powered by domestic consumption, but that transition is proving painfully slow. Aggressive stimulus risks piling up debt. Structural reforms are politically difficult, and without stronger consumer demand, China remains heavily dependent on global markets, just as trade tensions with the US loom large. That creates a dilemma for Xi. Externally, China holds leverage from supply chains to rare earths. Internally, economic weakness limits flexibility. As Washington and Beijing move toward renewed talks on trade, technology, and tariffs, China's domestic slowdown could quietly shape the outcome. For Xi, the challenge is clear: revive confidence at home while projecting strength abroad. How he balances both may not just define the talks with Trump, but China's economic future itself. With Shaurik Shah, Bureau Report, India Today Global.